Hey guys, welcome to this video. Just going to run down on the pound against the Japanese yen. A very interesting chart indeed, okay, because you have seen the devaluing of the yen as of recent times, okay, people pulling their money out of what is a traditional, or at least at this point, traditionally a safe haven currency or investment. So what you had before was lots of price action, lots of juicy price action down here to give you rejection to the upside, coming off your long-term 200 MA, your swing traders moving average. And you were way down here on your stock oscillator. Okay, clearly price is low on average, if you like, and that's all that your stock operates on. Then you come right up to the top side. Now you're overbought, and on average, price is very high. Okay, you're moving away from those MAs. Price is getting more extreme. Now, people often ask me what to do in these extreme markets, or particularly in this case, where I would enter to the short side. So if I go the weekly, what can I see? Well, I can clearly see a previous level here. All right. Now, the problem with this is that the candle we've got right now is so full-bodied and strong. There's so much momentum in it, okay? And it's likely this previous high there is just going to get wiped out, okay? And it's likely because you haven't gone a long way and straight back into that area is where you're going. So you put your time frame slightly higher to the 1 hour, and you can see very much the same picture. 4 hour the same. It's this really steep up move and loads of momentum. So therefore, if you were going to short, I mean, it's okay at the moment, but preferentially, I would hold off and look for those long-term entries, okay? Places where you may end up. You know, as I say all the time, yen pairs can rally and rally and rally and rally over very long periods of time, okay? Look at this, 50% of a move, more or less, to the upside. It's enormous. Preceding that in 15 to 16, the years, 195 all the way to 125. So again, a significant fall. But if you look here, okay, you can see clearly price rejection there, clear candle wick stretching down. Pull it all the way across, and you can see that's where you end up. You've only hit that same area once since 2008. 16 years, so it still remains strong in my view. So that is where I would say it's likely the larger money in the market is looking short, and therefore where I would like to as well. I want to ride that train. I want to be alongside those who are making money, and so I make money myself. And that's essentially what we do when we trade for income in our private live room, which you can see the link to underneath this video, as well as my free training. On the monthly as well, look, you're way, way, way off these moving averages. Price is well above average for this time period. Stock oscillator is still up, okay? You're very much overbought, and you would expect to turn at some point. It's just where, okay? And, you know, every single fall here, if you look at all this rejection, it's just constant. There's constant rejection here, okay? And it's no good, okay? You don't want that. You want short entries, and you want to do it after a further extension in many cases. And you're only really going to get that if you get up here. Okay, so this is showing you that there's strength. You saw it just jump up again. Okay, there's a lot of yen selling at the moment. You're seeing various yen pairs come across. I don't think this area here is particularly strong. There is a bit of resistance, which you could take, but what concerns me more is just the body strength of this candle and how far you're pushing up in momentum wise. So there's no need to rush. If you miss the short, you miss the short. Okay, you have gone up 3 weeks, which does help. You may find you even get intraday falls with this, as we hear more from the Bank of England, especially with today's inflation data for the UK. It's not looking good, all right? And you've seen that pound push up again, as people again would rather invest in pounds if the rates stay high for longer. So target really, if you had longs, you know, you could exit them now or at least lock in some gains, but I'm looking at that very long-term bias. I wouldn't like to buy it until you get near a 179, and then after that near a 172. It's just way too high. Like I said, way, way, way too high for this time period. You can see all the support existing lower down, and it would come back between those key moving averages. Of course, you need to use moving averages in the right way. You can't just use them willy-nilly and think it makes you good at what you're doing, essentially. So learn that well if you can and apply it correctly. Thanks for watching, guys. Don't forget to get my free training underneath. Also, in my live room, we just did another 3 hours of teaching. You can can get that too. See you in the next one, guys. Follow me on TradingView as well if you haven't.